Hi everyone, today's Wednesday, March 30th, and it's around 1:30 p.m. Most major market participants were waiting for Janet Yellen's speech yesterday in order to gauge the Fed's dovish or hawkish stance. Clearly, we got our answer as Chairman Yellen's dovish comments sparked a rapid closing rally yesterday, followed up by continued strength in the major averages today. Investors and traders alike don't want to be left behind as this bullish rally continues. All major averages except for the Russell 2000 have recaptured their long-term trend lines, although even the Russell 2000 is now within a standard deviation of that long-term trend line. So it appears that we will close out the first quarter on a positive note. After the January and February decline, the recent market rally is very welcome. Richard Russell of the Dow Theory Letters wrote in 1991, and I quote, "People forget that what prolongs a bull market, any kind of bull market, is the phenomenon known as a correction. A rocket rise type of bull market, one with little or no corrective action, always ends up a short-term bull market. Thus, seasoned investors tend to welcome corrective action during bull markets. They know that the more corrections and the longer and more often the bull market is held back, the bigger that bull market will ultimately be, and the higher that bull market will climb. The same thing is true in reverse during bear markets," unquote. Richard Russell began publishing the Dow Theory Letters in 1958. And don't forget, central banks need stock prices higher to support wealth creation in an effort to push the world out of its general growth malaise. However, we all know that central banks can only do so much, and that's why the upcoming election will be critical if we are to continue the market improvement. We will need positive fiscal action to stimulate more job creation if the market is to continue higher. To this point, we have not seen any significant fiscal action in order to accomplish this. In the meantime, consumer confidence continues to improve and has steadily increased from a low of 25 in 2009 to a high today of around 96.2. Since the consumer represents about 60% of the economy, this is another bullish signal. So we have just a few more weeks left until tax day. If you need assistance with your tax return preparation, please keep us in mind. Our tax return service is working out quite nicely for many of our clients. And if you have extra investment dollars that are not getting the returns you deserve, this may be a good time to consider redeploying. The old adage, "Don't fight the Fed," is applicable today as it ever was. Once again, if you ever have any questions regarding anything financial, please don't hesitate to call. We're here to help, and thanks for listening.